Really good was really good. We back at it again. Hope everybody had a great week, even though price action sucked Wednesday through Friday. But hopefully you were self-aware, you understood, and you reduced risk, didn't trade or demo traded. If not, don't beat yourself up. Just learn and move forward. But yeah, overall, everybody wanted an educational video. So in this video, I'm gonna be going over a topic a lot of my students in my mentorship and overall have been asking me, which is in relation of how do you understand what price is going to do, where it's going to go, what it's going to seek, if it's going to reverse, if it's going to be choppy. And that all revolves around price action within the candles and being able to read the story that the candles are telling you in that moment, because this is a crucial, the most important concept within trading, to a point where if you understand it, and more importantly, you get the screen time, because that's what's most needed, isn't the video, it's the screen time, then it gets to a point where you don't even need to chart anything out other than liquidity, imbalances, and you're freaking done. You feel what I'm saying? So that's what we're going over in this video, and yeah, let's get straight to it. All right, so first things first, what do I mean and what do people mean when they say read the story that the candles are telling you? You might be like, JT, it's not a book, so what do you mean read the story? Well, just like a book, you have to visually be in depth with what you are looking at in these candles, just like a book, so you can understand what's going on and what you can expect in the near future. That's the overall meaning of read the story. Now, the only way you are able to read the story within these candles is by first understanding what a candle is, period. Don't nobody really know or even ask or even talk about what is an actual candle. What does it actually represent? Very few people even know that. Very few people even care to even know that. They just care if it's going up, down, up, down, up, down. And then they're just going to be able to click buy, sell, whatever. And that's not the case. In order to master the skill, the most important skill needed within trading, not your supply and demand, not your freaking whatever. This, being able to read the price action within the candles in the store that they are telling you, is the most crucial and important aspect in trading. And this is a skill that you learn and master with screen time. And I'm giving you a head start with this video. Okay. So first things first is, what is a candle and what does it represent? A candle is a representation of price. Okay. Now, how it represents it is based on two different aspects within the candle. Now, just like the candles, the scented candles in your mother's house, you have the wick and you have the body. The thin part is the wick and the thick part is the body of the candle. Like I just said, these are both representations of price, but the difference between the both is that in the end, they represent two different signs of price. Okay. Now, what I mean by that is the wick is a representation of where price was originally, and the body is a representation of what's being done to price currently. Okay. Now, with that understanding, now you can kind of get a gist of, oh, now I know. You feel what I'm saying? Because if you look at this wick lets us know that we were originally a big bullish candle. You might be like, how do you know that? Because the wick was all the way up here, and the wick represents price where price was originally. And then the body represents what's being done to price currently, meaning we went from being super big bullish to flipping all the way to the sell side, signifying a lack of bullishness and an increase in bearishness, which led us, as we can see, led to a pullback, because overall complementary with the overall structure, we had no pullbacks and we were due for a pullback. But besides all that, that's what that was right there. It was a representation of what price was doing, where it was originally with a ton of bullishness, and then what happened when it got shoved all the way down and what was being done to price currently. Again, the wick is a representation of where price was originally, and the body is a representation of what's being done to price currently, because again, originally price is all the way up here, super big bearish, and then price did this. The body shows what's being done to price currently, which is shoving all the way down. Again, signifying that we went from super big bullishness to a ton of bearishness, and you could have quickly caught the scalp even on the 1 minute time frame right here. Done. Okay. And that's what a candle is. Again, it's a representation of price, and the wick represents where price was originally, and the body represents what's being done to price currently. Okay. But now that we understand what a candle is and what is meant by read the story, now we need to understand the three types of candles that you will see on a daily basis. The only candles, quote unquote, candlestick patterns that genuinely matter, quote unquote. Granted, you're not going to use the terminology like that unless you're like a beginner, but regardless, these are what these are. And these represent momentum and pressure and lack of momentum and pressure within the overall structure, the overall direction, giving you an extra add-on to the overall story of what you can expect to happen in the near future, okay? The first candle I want to go into is the engulfing candle. This is a gigantic, drastically sized candle, usually bigger than the previous candle, but regardless, it's a huge candle signifying tons of buy side or sell side pressure in an overall direction, whether that's to reverse and shift in structure or continue in its current structure. As we can see here, structurally, we were bullish. We pulled back, and then we showed signs that we were going to continue structure with this huge, gigantic bullish candle, letting us know that we have tons of buy-side pressure and momentum within this overall direction. That is the engulfing candle, one of the most important candles that you need to visually understand what you're looking at, because this can let you know that whenever price is pulling back and you don't know when to get in, when you see that candle, you'll see it drastically jolt to that continued direction. And then you can get the signs based on the price action in the candle that you can actually take this trade. And then boom, you can get into this move, okay? Let's say you missed the move, okay? This leads into the second candle, the hammer candle or the pin bar candle, okay? Which is a better representation up here, okay? But I'll go back down there just to go within that overall trend. But a hammer candle or a pin bar candle is a representation of an increased pressure to a reduced pressure to the opposite and then overall continued direction. Now, what I mean by that is if we look here, the wick is all the way down here. Clearly, we were a big bearish candle, and then we lost momentum and pressure, and then we reversed with the momentum and pressure in the opposite direction that we were originally going to the overall continued direction, which is the bullishness. We went from being super big bearish, tons of sell side pressure, to tons of bullishness and tons of buy side pressure, flipping it all the way back to the buy side. Again, wick to body, letting us know that we are going to continue to seek that liquidity, to seek that imbalance above, okay? Now, the last candle is going to be a representation of a lack of momentum before I go into anything else related to like wick to body ratio. All right, now the last candlestick pattern that you're going to be seeing on a daily basis is going to be a doji candle. This is a representation of a lack of momentum within an overall direction. This is an important candle as well because this also lets you know when price could decide to go choppy, or if we could possibly expect a huge dump or pump in one of these directions, okay? Like in this case, we went from being super sideways, super slow, no momentum, because look at the size of these tiny little candles, and then we dumped all the way down. Okay, other cases, price could just continue moving flat. Other cases, we could just pump all the way up. Regardless, this doji candle, which is usually long wicks and a small body in the middle of it, is a representation of a lack of momentum, meaning we need to be cautious because price could either be moving really choppy because we've lost momentum, or we could see price pump in one direction or just drop in the opposite direction, whatever, meaning we need to be cautious and we need to wait for that overall drastic move. So then we can see that we're actually going to break out of this lack of momentum and actually continue with some momentum in this direction, okay? Now, before I run back some of this other stuff, the other thing I want to talk about is wick to body ratio. This is just what I call it, okay? Now, the reason I call it a wick to body ratio, it's not really like a ratio in regards of you doing numbers, but an overall visual ratio. Look at the size of this wick, and then look at where the body is. This lets us know that we went from, again, being a huge bearish candle to shoving all the way up, flipping to the buy side. Comparing the wick to the body, the overall visual ratio, this lets us know that we have tons of buy side pressure in this case, because look at the length of that wick and the fact that we went from that big of a bearish candle to somehow shifting and pushing all the way back up to the buy side. That's what I mean by wick to body ratio. When you're looking at price reject off these POI zones, you usually don't want to just get in once you see the first wick, the first quote unquote rejection off that first tiny little wick. No, you want to see price get shoved up. You want to see that wick get long, and you want to see that body get even tinier, maybe even flip colors to the opposite direction. In this case, we went from being bullish and then we flipped colors to the buy side to let us know that we're actually going to reject off of this or continue in this overall direction, okay? Now that we know what is meant by read the story, now that we understand what a candle is, now that we understand the types of candles, and now we understand wick to body ratio, now let's just run it back real quick. The candles are a representation of price. The wicks represent where price originally was, and the body represents what's being done to price currently, because price originally was all the way up here, And then currently price was pushing it all the way down. Okay. Secondly, going into the candlestick patterns, a engulfing candle is a huge, gigantic, drastic candle, which is a sign, especially in a continued structure after like pulling back, like we see here after we pulled back. It's a sign that we have increased in momentum and pressure in this overall direction, and we can expect price to continue in this overall direction. And what makes it so important is because, especially when there's big liquidity to seek out, you understand that price clearly wants that liquidity, because let's say we had liquidity right freaking here. Price moving that bullish, we're clearly seeking that liquidity point on the daily time frame or a higher time frame liquidity point, what I call a primary liquidity point, just a big liquidity point that price primarily wants. All right. The second candle is the hammer candle or the pin bar candle. They're both the same representation because overall, and this requires the wick to body ratio, is the hammer candle. The pin bar candle is when you see these long wicks and then price gets shoved all the way up to a tiny body to the top, or maybe even flips colors, or like right here, how we had a long wick and then we shoved it all the way up. That is what you would call a hammer candle or a pin bar candle. This represents that we had tons of pressure in this direction, and then we shoved it in the complete opposite direction, or the direction that we originally were continuing in, like we see here, because we had tons of momentum in the opposite direction, and then we lost it and it increased the momentum back in the correct direction in this overall case to the buy side. Okay. And then lastly, the doji candle is a representation of a lack of momentum. This lets us know that price is slowing down. It lets us know that price could either get choppy. This also lets us know that price could also have a drastic move, either up or down. And if it does that, we just need to be cautious, wait for the pullback, and then we could actually look to get into this overall move. But at the moment, we need to be cautious and wait for price to actually move out of this overall lack of momentum zone, this chop zone, this overall range, okay? Now that we understand what it means by read the story, now that we understand what a candle is and what it represents, period, and now that we understand the top three and the only three that you really need to know in regards to the quote-unquote candlestick patterns, now you need to bring this into your overall trade day and your overall trading strategy or concept, okay? Overall, when you are going into the market, when you're looking for a trade and the markets are moving mad bullish, like we see over here, if we can bring it down right over here, in this case, you need to be aware of, we're moving with tons of momentum and pressure, because look at these two candles. Let's just know that we have tons of buy side pressure, meaning that we can expect price to continue in this direction. Secondly, okay, we need to wait for a pullback. So then we're not just buying at the high of this candle. We can actually get it at what some people call a discount price, or overall just a lower area to get a better entry, which would be this pullback here. Now, we can't immediately get in off the pullback. We need to wait for price to reject off of it and show us a good wick to body ratio, which we can see here, how we had a long wick, and then we shoved the body all the way up to a tinier body, but still a decently sized body in regards to the rejection, and overall flipping the color, letting us know that we have a clean move to the buy side to seek the liquidity all the way up here. And then all we have to do is get into the position. I'd say probably right around here. Stop loss below the wick, because on the 1 minute time frame, this is a lower high. So if price were to break it, we could see price shift structure on the even lower time frame, and then TP at the liquidity 1 to 3 RR, just like that. There was nothing that needed to be put on the charts, nothing needed to be set up other than liquidity and imbalance within that overall direction. And because we saw the momentum and pressure within this direction compared to the overall structure previously and currently, and then compared to that overall wick to body ratio when price pulled back to continue structure, so we actually had the ability to get into this move and catch the rest of it to overall seek the clearest day what we are seeking, which is the liquidity. 1 to 3 RR, done. Absolutely done. And that's literally all you have to do. Now, I'm not saying don't mark up anything anymore or no, okay? But I am saying that this is one of the most important and the most important concepts that needs to be understood, okay? Now, it's not going to be easy at first, because this is a concept that isn't really learned based on a YouTube video or your mentor. This is a concept that is learned naturally. That's learned naturally, accidentally, because of the screen time that you've actually put in. So if you're not putting in any screen time, you're not going to be able to master this. Just because you watch my video doesn't mean you're going to be able to master this. You still need the screen time. All right, but yeah, that's today's video. I hope it was helpful. If not, maybe you want more in depth on a one-on-one level. I do got the mentorship, you feel what I'm saying? So go tap the link in the bio, join the Discord and the Discord mentorship, because I did just expand more into my mentorship, making it a little bit bigger, because I want to be more helpful towards something that's actually beneficial to new traders in the long run, and not just signals and stream, which is only beneficial to those who are only looking for the money aspect in trading or don't have the time to actually learn the skill of trading, which if you're that person, just join the Discord, especially if you're just looking for a community to trade with. But if you're looking to master the skill long term to build generational wealth indirectly, be being able to pass that skill on generation to generation, then tap the link in the bio and come learn how to trade. You feel what I'm saying? But again, I hope this video was helpful. Tap the link in the bio, join the social medias and the Discord. God bless, and I'll see y'all next time.